Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. Today we're discussing Tropical Battery Limited and WISYNCO Group Limited. I'm joined by another familiar face, Asha Smelly, our Assistant Sales Manager and frequent co-host on the channel. Welcome, Asha.
Always good to have you on, Rachel.
Thank you. Don't forget to subscribe if you like the content. Also, hit the bell to stay up to date with the channel. We upload content like this once a week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Now, I'll get started with WISYNCO and then I'll pass over to Asha to discuss Tropical. WISYNCO is one of Jamaica's leading production and distribution companies. The company produces its own brands of beverages such as the Bigger soft drinks, water, canned water, and the Boom energy drink. In addition to their owned brands, they are the exclusive bottler and distributor for Coca-Cola, Sprite. They're also distributors for True Juice, St. Mary's line of snacks. They're also big on importation of top brands such as Red Bull, Nestle, and the list continues, I'm just naming a few. The company IPO'd in December 2017 at $7.87 and was more than 2 times oversubscribed two days later. They raised $6.1 billion for 20% of its ordinary shares, implying a valuation of $30.5 billion. Today, 5.5 years later, the stock price is up to $18.69, and the market cap has grown to $70 billion. That's 130% growth. Interestingly, the stock traded up to $12.50 within the first week of trading, so that was a 58% growth for those short-term traders out there. Also, the stock traded at a high of $28, so there's still room here for growth for WISYNCO. So let's take a look at their results for the 9 months period ended March 31st, 2023. Revenues grew by 27% to $36 billion when compared to $28 billion reported the prior year. Cost of sales up 25% to $23 billion relative to $18 billion reported the prior year, which resulted in gross profit closing the period at $12.7 billion. Total expenses rose 30% to $8 billion, which the company noted resulted from inflationary increases in some of their variable expenses associated with increased revenues, along with some marketing expenses. All this translates to a pre-tax profit of $4.8 billion and a net profit of $3.7 billion, a 24% improvement over the prior year's profit. All this translates to a trailing EPS of $1.27. Examining the balance sheet, total assets grew 21% to $29 billion, up from $24 billion recorded for the prior period. Of this, near cash amounts to $9 billion, so plenty of cash to fuel growth here. Total liabilities now stand at $8 billion relative to $7 billion. And finally, shareholders' equity closed at $20 billion, up from $17 billion reported the prior period. We are seeing where the stock is trading today at $18.69, a PE of 14 times relative to its trailing earnings and the main market harming average of 10 times. While a PE of 14 times may be viewed as high for the main market, we believe this blue chip company still has lots of room for growth, as evidenced by the strength of their balance sheet. They have near cash of $10 billion and only $5 billion in total debt. If we look at the next slide, actually, they have also demonstrated a track record for growth, not only in revenues, but profitability over the last few years. They've grown their top line by 50% and their bottom line by over 100%. The company has consistently booked quarterly profits in excess of $1 billion for the last 4 quarters, and we expect this to follow through into the 2024 fiscal year as the company continues to see increased demand in all its business channels. As I mentioned earlier, there's still lots of room here for growth for WISYNCO. The company has been experiencing some production challenges, which in turn impacted their revenues and some margins. But the company has embarked on a huge capital expansion projects to mitigate these effects. And they're investing around $5 billion in new equipment and buildings as they aim to increase production capacity to meet these demands while improving cost efficiency. They are both excited and optimistic about this project, which should reap the benefits halfway through the 2024 fiscal year. Interestingly, the company acknowledged there are still a lot of opportunities international that they have not taken advantage of, and this capital expansion project puts them in a good position to do so. The Jamaican market is so small compared to the export market, so the growth here can be exponential. So, once the company starts realizing some of these benefits, we should be seeing some improvements in both top and bottom line as early as next year. Finally, looking at the next slide, the stock has been trading within the $16 to $18 space. The stock is trading today at $18.69 at a PE of 14 times relative to the main market PE of 10 times. It has traded as high as $28. Again, some may view a PE of 14 times as high, but as mentioned, this blue chip company has lots of room for growth, so we can expect the stock to not only grow into this valuation, but also improve on this valuation. I really like this stock. It's one of Jamaica's leading production and distribution companies. They're distributing over 142 brands. It's a strong brand with a market cap of $70 billion that continues to contribute to the success of Jamaica. They have a great management and executive team led by William and Andrew Ford, and a very respectable board with the likes of Adam Stewart and John Lee, just to name a few. WISYNCO has quickly become a high blue chip company from an institutional investor perspective, as evidenced by the quality of its top 10 shareholders and by the very strong growth exhibited in its revenues, retained earnings, and just the overall strength of the balance sheet since its IPO. I like the stock, and I'll be definitely watching it over the next few quarters, And lastly, guys, I encourage you to take a read of their annual report for more details. It's a lovely report, and it's well crafted as an investor presentation to its shareholders. So check it out. Asha, what are your thoughts on WISYNCO?
So for me, WISYNCO is a value stock. It's currently trading over the past 2 weeks within a band of $18 up to $18.88. So based on the highs that it has traded up to 28, you're looking at a $10 discount currently. The company has been consistent in posting high revenues. They posted revenues increase of 38.6% and profits of $1.2 billion. The company also recently announced their capital expansion, and they're installing 2 new beverage lines, and they expect to benefit from this in financial year 2024. So with all that being said, WISYNCO is a value stock for us. So we look forward to seeing what the numbers continue to bring. And if it is that you are looking to add some value to your portfolio, it's attractively priced, while the PE may be a little bit higher than the average, but it is something that you can still consider adding to your portfolios.
Absolutely agreed. Now, let's move on to Tropical Battery.
So let's take a look at Tropical's battery performance for the 3 months ended March 2023. Tropical Battery's Q2 performance paints an impressive picture, showcasing the firm as a compelling growth stock in the making. The company has demonstrated strong growth trajectories underscored by robust revenue, profit margins, and net profit gains. Specifically, the quarterly revenue surged by 10.3% to reach $700.4 million. The 6-month revenue for the company stood at $1.35 billion and net profits of $94 million, noting an 8% increase in net profits year over year. For the quarter, gross profit margin stood at an impressive 31.8%, exceeding both the budgeted margin and previous year's margin. This demonstrates Tropical Battery's efficiency in managing operational costs and boosting profitability. In terms of the balance sheet metrics, Tropical Battery has achieved an encouraging 19% year-over-year increase in shareholders' equity, reaching $1.05 billion. This suggests that the company has been effectively using its retained earnings and capital investments to strengthen its overall financial position. It is also worth noting that current liabilities decreased by 17.8%, which is a positive indicator of the firm's efficient financial management. The company still faces challenges, especially in achieving its targeted annual growth rate due to a significant market share. To overcome this, Tropical Battery has adapted a multifaceted growth strategy involving product diversification into renewable energy and electric vehicles and potential strategic acquisitions. These initiatives are expected to reflect more visibly in the second half of the year and are likely to stimulate growth. Tropical Battery has been innovative and adaptive to market trends. Its subsidiary, Tropical Renewable Energy, is proactively venturing into renewable energy projects. Tropical Mobility, an electric mobility solutions company created with the hopes of deepening Jamaica's electric mobility market, has obtained its vehicle importation license. This will enable the company to import new electric bikes. These vehicles will be utilized for the company's mobile delivery service and will also be made available for sale. Tropical Battery's consistent quarterly profit, as reflected in the movement from Q4 2020's $5.3 million to Q2 2023's $49.75 million, suggests a strong upward trend. This, coupled with the recent product diversification and strategic acquisition, positions Tropical Battery as an attractive growth stock. Looking at the stock price history, Tropical Battery shares have shown significant movement since its IPO in 2020, priced at $1. The stock has reached its highest trading price of $3.20 in May 2022, showcasing strong investor confidence in the company's growth prospects despite experiencing a low of $1.16 in May 2021. The stock is currently trading at $2.05, maintaining a positive uptrend. It's important to note that the stock is tightly held, with about 83.41% held by the top 5 shareholders. EPS for the quarter increased 100% to 4 cents per share, trading at a PE of 13.04 times, which is relatively cheaper when compared to the junior market average PE of 18.49 times. Tropical Battery is currently undervalued. To conclude, Tropical Battery's Q2 performance and forward-looking strategy underlines the company's growth prospects. The acquisition of the Dominican company Kaya Energy Group represents a significant leap forward in Tropical Battery's ongoing diversification efforts, not only widening its product and service portfolio, but also extending its geographical reach across the Caribbean basin. This acquisition positions the company to tap into a fourfold larger addressable market for solar power and energy storage equipment via its Tropical Renewable Energy division. Investors considering growth stocks should pay attention to Tropical Battery, given its strong financial performance, proactive diversification strategy, consistent profit growth, and attractive valuation. However, as with any investment, potential investors should consider market risk and perform their due diligence and speak with one of our licensed investment advisors. And that wraps it for the review on Tropical Battery. Rachel, what do you think about the company thus far?
Asha, Tropical Battery is one of Jamaica's oldest and most trusted household brands. They offer the widest range of brands and batteries across the island. They are well positioned in the market, and they actually have the largest market share in conventional batteries, which is good. They have trailing revenues of $2.5 billion, and interestingly, they have acknowledged that this growth is still not within their target range. So as they expand into new product lines, as you mentioned, and build out their renewable energy division, we should be seeing some growth here. The acquisition of Kaya should definitely advance this, and as you mentioned, it should extend their geographical footprint into the across the Caribbean. So let's watch and see how this unfolds. And that's it for today's discussion. A big thank you to our viewers for tuning in. We couldn't do this without your support. And to Asha, thanks for bringing your thoughts and voice to the panel.
Always good to co-host with you, Rachel.
If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady wins the race. Thank you, guys.